You found your dream home. It's perfect. The layout, the neighborhood, the price, it checks off every box. But there's one massive problem. You still own your current home. And you're stuck asking yourself the question that keeps half of Vancouver up at night. Do I sell first, buy first, or somehow do both at the same time without everything falling apart? Maybe you're lying awake running the numbers. What if my home doesn't sell in time? What if I end up carrying 2 mortgages? What if I'm living in a hotel with my family for a whole month? If that sounds familiar, you are in the right place. Here's what most people don't know. There are actually 5 different strategies for buying and selling at the same time, and most realtors only talk about 2 to 3. Today, I'm going to give you all of them. The strategy you choose can literally be the difference between a smooth move and a financial nightmare. So don't skip ahead, because strategy number 4 is a tool most banks won't even tell you about. By the end of this video, you'll know exactly how to time your move, the 4-day closing timeline that protects you, and the one question I ask every single client before we do anything. But real quick, if you want help figuring out which of these strategies actually fits your situation, book a free planning call using the link below or text me directly at 604-256-9186. We'll map out your likely sale timeline, estimate your net proceeds, look at what's available in your target area, and build a step-by-step game plan based on your actual numbers. The link and the numbers are both in the description. Now, let's get into it. Before you look at a single property, before you even think about which strategy to use, you need to get clear on your numbers. This is the step most people skip, and it's the reason things go sideways. There are 3 questions you must answer. Number 1, do you have your 5% deposit ready? If it's tied up to your home equity, there are tools to access it, which I'll show you in a few minutes. Number 2, are you pre-approved? Not qualified, but pre-approved. Will a lender support you carrying both properties temporarily if the timing isn't perfect? And number 3, what are your net proceeds? This is a number nobody talks about. Your net proceeds are what you actually walk away with after paying your mortgage, agent commissions, legal costs. That number is your real budget for your next purchase. If you fall in love with a home before you know your numbers, you are making an emotional decision, not a financial one. So once you have those numbers, how do you know which strategies to pick? It all comes down to how fast your current home will sell. The second thing I do with every client is pull comparables. What are similar homes in your neighborhood selling for, and how long are they normally sitting on the market? This tells us which strategies are actually available to you. If a home like yours are sitting in under 2 weeks, you have flexibility. Buying first, listing immediately, and having the timeline work in your favor is a realistic option. If homes are sitting for 45, 60, or 90 days, buying before you have a firm sale creates too much exposure. You need a strategy that protects you from that risk. The other variable is your buy side. If there's plenty of inventory in the area you're moving to, there's less urgency. But if options are limited, only 2 or 3 homes that fit what you need, you may need to move faster on the purchase and be strategic on the sell side. Once I have those 2 pieces, your sell side and your buy side inventory, the right strategy becomes obvious. So let's go through all 5. Strategy number 1, sell first, the peace of mind play. If your home might take a while to sell, or if carrying 2 mortgages would cause real financial stress, sell first. Once your home sells firm, subjects removed, you have your deposit in hand, your net proceeds confirmed, and you can shop for the next home as a committed buyer with no conditions hanging over you. That's a strong position to be in. The key is negotiating a longer completion or a rent-back agreement. A rent-back means you sell the home first but stay in it as a tenant, paying rent to new owners for 60 to 90 days while you find and close on the next home. Not every buyer will agree to this, but in the right market, it's absolutely worth asking. Yes, you might need to rent short-term or do a double move, but the clarity of knowing your sale is done and your numbers are locked in is worth a lot, especially in a market where nothing is guaranteed. This is best for homes in a slower moving market, clients with tight finances, or anyone who needs certainty before committing to the next purchase. Strategy number 2, subject to sale, the conditional offer. In a slower market, you may be able to write an offer on your new home with a subject to sale condition. This means your offer is accepted, but it's conditional on your current home selling within a set timeline, usually about 4 to 6 weeks. Here's what you must understand about this strategy. Most sellers will insist on what's called a time clause or escape clause. That means if they receive another offer from a different buyer while yours is in place, they will notify you or typically give you about 48 to 72 hours to either waive your subject to sale condition and proceed or let the deal go completely. So here's a critical detail. Your current home must be ready to list the moment you write on the offer. Not almost ready, ready. Photos done, pre-inspection complete, price decided. Because if a time clause gets triggered, those 48 hours disappears real fast and you cannot afford to be scrambling to get your home market ready during that period. Also, factor in your own subject removal period on your new home. Financing, inspection, title review, that due diligence period runs alongside your subject to sale window. So plan both timeline before you write. And be honest about the market. This strategy works in a slow or balanced market where sellers have limited other options. In a competitive market with multiple offers, sellers simply won't accept a subject to sale condition. So know your market before you try one. This is best for balanced or buyer's market and only when your home is already prepped and ready to list. Strategy 3. Buy first, the fast seller move. If the comparable data shows your home will sell quickly and inventory is limited in the area you're moving to, buying first can be the right move. But you need that 5% deposit available to write the offer. Whether that's in savings, a HELOC, or a gift from family, it needs to be ready before you write. And the moment you firm up on the new purchase, subjects removed, your current home goes on the market immediately. No delay. Your listing should already be fully prepped and ready to go live very quickly. This is a calculated move, not a gamble. The calculation is, how fast will my home realistically sell for based on the data? What's my financial exposure if it takes longer than expected? And does my pre-approval cover a short overlap if needed? This is best for clients with fast-selling homes, strong finances, and limited options on the buy side. In Vancouver's entry-level detached market and townhomes market, especially in areas with limited inventory, waiting until after you sell can sometimes mean missing the right opportunity entirely. By the way, comment below, would you personally rather buy first or sell first? I'm curious, what feels safer to you? Strategy number 4, new build with a long completion. Buy time to sell. Most people never consider this one. Buy a pre-sale or new construction home with a completion 12 to 18 months out. And just like that, the timing problem disappears. You lock into your new home today, the price, the property, and you have over a year to sell your current place without any pressure. No subject to sale conditions, no rushing, no timeline gymnastics. Now, there are a few things you need to know before going in. Pre-sale deposits are typically held in trust, protected until completion. But unlike resale purchases, many developers may need more than 5%. So some may require 10%, 15%, or even 20% in different stages as construction progress. So you need to make sure that capital is available before you commit. And because it's a brand new home, GST may apply. And that's an additional 5% on top of your purchase price that needs to be factored into your budget. So if you go in with your eyes open on those two things and you're not in a rush, this is one of the cleanest ways to eliminate the timing problem entirely. Best for clients who aren't in a rush, have access to a larger deposit, and want to remove all timing pressure. I would say more downsizers might be looking into this strategy. So we have number 5, sell off market to an investor by certainty. This one doesn't get talked about enough. If certainty matters more than top dollar, selling off market to an investor gives you a firm sale date, confirmed proceeds, and a completion you negotiate. No MLS, no waiting, no variables. You win net less than a full market listing. That's the trade-off, but you've already found the home you want to buy and you need the sell side to be locked in so you can move confidently. That trade-off can absolutely be worth it. You're not leaving money on the table carelessly. You're buying certainty with it. These are best for clients who need a certain timeline and are willing to trade some sale price for it. Now that you know the 5 strategies, let's talk about the financial tools that make them work. These aren't strategies on their own. They're tools you layer in depending on which strategies you've chosen and what your financial situation look like. The HELOC, Home Equity Line of Credit. A HELOC lets you borrow against the equity in your current home to fund the deposit on your next purchase before your sale is complete. Once your sale closes and your proceeds come in, you pay it off. The cost to you is just the interest for however long the funds were outstanding. This is the most powerful tool for the buy first strategy. Instead of waiting until your home sells to have a deposit, you access what's already yours. The catch? You need sufficient equity, a strong credit profile, and it needs to be set up with your bank before you need it. This is not a last minute solution, so talk to your bank early. Bridge financing. Bridge financing is a short-term loan from your lender that covers the gap between your purchase completes before your sale proceeds arrive. For example, the purchase closes on the 1st of the month and your sale on your old house closes on the 15th. Bridge financing covers the gap so you're not scrambling from the 1st to the 15th. So 2 things to know. Most lenders require a firm sale before they'll approve it, and it's designed for short gaps, days to a few weeks, not months. It's a precision tool for timing mismatches between 2 confirmed transactions, not a substitution for a sold home. Porting your mortgage. If you're mid-term on your mortgage and you locked into a strong rate, breaking it to buy a new home could cost you thousands in penalties. Porting lets you transfer your existing mortgage and its rates from your current home to the new one, avoiding the penalty and keeping the rate. In today's rate environment that could save you hundreds of dollars a month, your lender needs to approve it. The new property needs to be qualified, and the timing between your sale and your purchase needs to align closely. So talk to your mortgage broker about this before you make any moves. Most people find out about it too late. Family gift or loan. More common in Vancouver than most people admit. If a family member can gift or lend you the deposit temporarily, it can unlock the buy first strategy without needing a HELOC or bridge financing. Just make sure it's documented properly. Your lender will ask about the source of the deposit funds and the paper trail that protects everyone. Personal line of credit or savings. If you have savings or a personal line of credit with room, this can cover the deposit. Just confirm with your mortgage broker first. Drawing on a credit before closing can affect your debt servicing ratio and potentially impact the mortgage approval. So always check before you draw. If you're buying and selling at the same time, the sequencing of your completion and possession date is everything. Here's the structure we aim to build into both contracts upfront. Tuesday, your sale completes. Funds flow through your notary or lawyer, and your mortgage gets paid out, and your net proceeds are confirmed and ready to use. On Wednesday, your purchase for your new home completes, using the proceeds from your sale from the old house from yesterday. No bridge loan required if everything lines up. The new home is now yours on paper. And when Thursday come along, 2 days after the first completion, you get the keys to your new home and you can start moving in. Now by Friday, you give possession of your current home, of your old house, to the new buyers. And this is a minimum, meaning here's where negotiation matters. If we can push possession of your old home to Saturday, Sunday, or Monday, or even longer, do it. That extra time means you're not trying to move an entire house in 24 hours. It's worth asking every time. This 4-day window gets negotiated upfront when writing both contracts. It's not always possible, but it costs nothing to ask, and it can make a difference between a very stressful move and a very smooth one. Once your dates are set, we normally stay very active with both agents for you. If something shifts on either side, a completion moves by a day, a possession that needs to be flexible, knowing early gives everyone time to adjust. Good communication here can save an entire transaction. No matter which strategy you choose, your current home should be prepped and ready to list. You may want to get these done early: the photos, videos, the marketing plan, pre-inspection checklist, staging sorted, price confirmed with your realtor matters. Here's why this matters. Regardless of your strategy, in a subject to sale situation, a timeline clause can be triggered at any moment, and you have about 48 to 72 hours to respond. If your home isn't already on the market or ready to go live the next day, you may not be able to protect yourself in that window. In a buy first situation, your home goes live in the same day you firm up the purchase, not a week later, that same day. Being prepared isn't just smart. In this situation, it's your protection. A few financial details that catch people off guard. At Vancouver price points, even a week of carrying 2 mortgages can cost several thousands of dollars. Plan for it before your mid-transaction, not after. If you're breaking your mortgage midterm to sell, your lender may charge you a prepayment penalty. This can be a significant number, and it comes directly off your net proceeds, so know that number before you list. The 4-day closing sequence only works if your notary and lawyer understands it and is available for it. I always make sure both notaries or lawyers and both agents are aligned on the same timeline and the order of funds flow before we're mid-transaction. And before we look at a single property, I walk every client through a net proceeds estimate: sale price minus mortgage payouts, minus commissions, minus legal costs, minus your taxes and penalties. And that final number is your real budget. Everything else flows from it. And I want to take a second and acknowledge something. Buying and selling at the same time is genuinely one of the most stressful real estate situations a person can go through. You're managing 2 of the biggest financial transactions of your life all at once, with real deadlines, money, and a family counting on everything to work. That's a lot to carry. My job isn't just to know the strategies and the tools. It's to carry the complexities so you don't have to. When you work with me on this, I'm tracking the dates, coordinating with both agents, staying in touch with the lawyers, watching the market so you can focus on your family and your move. When you're interviewing realtors for this kind of transaction, ask them directly, have you done this before? What's your process like? How do you protect your clients if one side falls through? The answer will tell you everything. Okay, so that's the 5 strategies, the full financial toolkit, and the day-by-day timeline. You know more about buying and selling at the same time than most people who are actively in the middle of it. But knowing the strategies and knowing which one is right for you in your situation, those are 2 different things. You do not want to be figuring that out while you're already under pressure and writing offers. The people who navigate this smoothly are the ones who build the plan. So if you want help mapping out your specific situation, book a free planning call using the link below, or text me directly at 604-256-9186. We'll map out your likely sale timeline, estimate your net proceeds, look at your inventory in your target area, and build a step-by-step game plan based on your actual numbers. The link and the phone number are in the description below. And if this video gave you clarity, like this video and subscribe. Every week, I put out content for Vancouver homeowners who want to make smart, informed real estate decisions. Thank you, and I'll see you in the next one.